Hi, I am Anna. I come from www.ntvforex.com. Gold demand for bullion is hotter than ever. Analysis.http ntvforex.com News ID 8E4B7B 7/29/2021 21:47 AM. The USD is enjoying some respite from the constant selling seen during July, with the gold rally temporarily stalling and offering up an excuse to stop selling the buck. But when it comes to FX trading, calamity is rarely apparent. Still, much of the latest gold surge has been viewed as the mirror to USD weakness. Gold volumes stood out yesterday, but a clear sign that the gold moves have been an essential driver of the broader US dollar price action of late was when ZAUSD quickly corrected to 1934, shortly after a headline indicating China's H1 gold consumption fell 38%, which took EURUSD down to 1.1720. And when gold futures toss aside its inverse correlation to yields, which the yellow metal has been tied at the hip with for the past 18 months, then causality is never clear. The market turned completely discombobulated yesterday due to silver trading in a 15% range. Stops on the top side seem to have been triggered during the Asia session, while, in a similar but perplexing fashion, stops to the downside were triggered as London came in. Oddly enough, yesterday bullion markets looked to be getting dragged around by a golden nose ring from its sibling silver, with the pickup in realized volatility, possibly indicating extended long fast money positioning. Keep the seatbelt fastened, as there could be a further risk of more whippy corrections ahead of month-end reallocation flows, as gold is up more than 9% on the month, while US equities are closer to 3.54%. But despite the heightened volatility, price action on gold has been reasonably constructive overnight, as the yellow metal continues to be universally favored as an alternative asset to position for a weaker USD. This year's rally in gold had been, to no small extent, a real yield trade. As real yields fell, gold rose. This week's surge to record highs saw gold divorced from that relationship with real yields. The recent rally in gold made it look very much out of lockstep, but there's nothing to stop the rally continuing. The most valid concerns see the Fed shift towards an inflationary bias, as Chair Powell and crew are stuck with the unenviable task of driving inflation expectation higher to avoid the downward de-anchoring experienced by the ECB. Vice Chair Clarita warned a few weeks ago that inflation expectations were at the bottom of the range, consistent with a 2% target. Governor Brainerd noted a couple of weeks ago that it was time to switch policy from emergency support to accommodation. One real possibility is that the Fed has put the pedal to the metal this week, even front-running the outcome of the framework review while slashing its estimate of long-term neutral rates to less than 2% and setting in motion an average inflation target with an unyielding commitment to its achievement. But when extremely dovish Fed policy expectations get juxtaposed against rising geopolitical tensions, elevated U.S. domestic political and social discord, and a growing second wave of COVID-19-related infections, it beckons the need for gold as an ultimate hedge. But when combined with a record level of debt buildup by the U.S. government, real concerns about the U.S. dollar's durability as a reserve currency have become very visible. It all screams gold as the ultimate hedge. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.